Good morning, everybody, and welcome to today's episode of Derek Invest. I'm your host, Derek Miller. What are we going to talk about today? We're going to talk about market updates. I know NVIDIA is reporting earnings after hours. We covered NVIDIA yesterday. I think it has like a run up pre-market, and I definitely have a down move in price forecast from yesterday. I didn't even really, honestly, I did not realize NVIDIA was reporting. That information doesn't really interest me. I just look for the same. I just look for institutional money and institutional footprints and what they're doing, and then I follow suit. So what we're going to talk about today are some stocks we meant to hit yesterday we didn't get to. So we'll talk about Crowd. We'll talk about NextEra Energy. I'm also going to talk about SMCI. I'm going to go through some stocks that we've gone through. I forecast accurate forecasts. I have plenty of them. If you haven't seen my forecast, go onto my Twitter account. Where is that? Where's my Twitter here? There's my Twitter. It's not exactly so obvious. Derek Me 752-63605. That is in fact me. I have not changed that handle. I may do it today. I've been meaning to do it forever, and I just haven't. You can also see me, Honest Trader, on LinkedIn, and then obviously my email address, dmiller@prometheaninvesting.com. But my Twitter, I post charts every single day of what I'm doing. Usually on LinkedIn, I just post them when the forecast hits. And there's plenty there too. I also have a Facebook and Instagram and all that, but they don't seem to be as active, so I'm not active on them. If you're not interested, I'm not interested. I mean, what can I say? Okay. One final thing: the VIP mentorship starts today. There is still a couple of slots available. If you're interested, I'm sure they will be taken. I have a dozen or so people that were talking to me about it. I don't sell this thing. This isn't a pitch. When I say I don't sell it, I mean I'm not pushing it on anybody. Look, I'm interested in people that are interested in learning the truth. And I saw something yesterday. I'm going to put up a cool social media post about it because I really liked it. There are three separate firms that basically own 88% of the S&P 500. So when I tell you that there is someone in control of supply of the stocks or supply of the markets, if you don't believe that, it's because you don't know anything. You don't know any better. You think that the guy is on there making fun of the fact that we call it a stock market or an equity market because it's three firms. Now, is that three people? No, it's three firms, I said. Right? You could probably guess who they are, but I'm not going to tell you. I'm going to put up a cool post. 88% of the S&P 500 is controlled by those three firms. 88% of the supply. And you think you can't identify what they're doing? It's just funny. It just happened to come across my desk yesterday. I haven't verified the information, but I can tell you I've been doing this for 25 years. That sounds right. That's kind of how I base my life. Sounds right. Is it 88%? Is it 78%? Is it 70%? Is it 95%? I don't know. But that sounds right. There are a very few number of people doing a lot of the moving of stock, which obviously affects the price as long as demand remains constant, and it seems to. Demand is either very high or it's high. And it's been that way for 40 years, right? I mean, it's just the way it is. Anyway, so VIP mentorship starts today. If you are interested and not yet in, email me at dmiller@prometheaninvesting.com. Email, phone number, name. I'll have a quick call with you just to make sure that the mentorship program will meet your needs and meet your goals. I believe it will, especially if you're watching this. In any case, I also do one-on-one sessions. I have 3 students at the moment doing one-on-one coaching sessions with me. I only take 5 students at a time in my one-on-ones. We usually get together once a week. Some of my students actually like to get together 5 times a week. They break it down. If you're doing 5 sessions a week with me, I am willing to break it down to half-hour sessions instead of hours. You get notes on every session that we do together, and it will help you establish who you are as an investor and trader, and you will create an investment rule book, guidebook, whatever you want to call it, based on you, and it'll cover the 3 pillars of investing: risk management, cash management, What I say, risk management, cash management, and investment management. If you don't have said set of rules for those three things, and you don't know exactly, if I told you tomorrow, if I say the market is going to run up today 6%, you should know exactly what you're going to do coming into the close. If I say it's going to open up down tomorrow 7%, and I don't care what the news is, it's opening up 7% down tomorrow. If you don't know exactly what you're going to do, that's a mistake. Period. That's a mistake. I tell everybody the same thing. Look, if you think it is a good idea, I surf, right? And so people tell me that, they've gone on to YouTube or they've done some things, or they even watch me, right? I watch you. I planned on mimicking what you do, and you think that's going to work. That's the same thing as a surfer, such as myself. I've been training, getting into shape. I know it's El Nino, and I'm paddling into 25-foot surf. And you tell me, I'm just going to follow you in, do what you do. You think that's a good idea? Do you think you're going to live through that surf session? Because you're going to do what I'm going to do, you think you're going to live? No, you're not. And in investing and in trading, you think you're going to do what I'm going to do, and that's going to protect you and you'll be able to do it? No. And that analogy is completely accurate. In fact, some would say they'd rather be dead than financially dead, because financially dead is a lot harder than dead. It just is. It's miserable. And everybody's been there, so you should know that. And if you haven't been there, good for you. Yeah, I mean, really, I'm not joking. That's amazing. And there are plenty of people that haven't been there. Good for them. But you don't take chances like that. You don't take chances like that with your financial life. You work too damn hard. You're going to paddle out in a 25-foot surf with me, duck dive when I duck dive, take off when I take off, paddle when I paddle. You probably don't even know how to paddle, let alone duck dive. What do you think is going to happen to you in a market with a bunch of guys that are experts? You're out there with the pros, just trying to follow them. It's not going to work. So anyway, that's my opinion. Do what you will with that information. Let's get into some stocks, everybody, because I'm excited. I don't know. I'm not really, I'm always excited. I enjoy doing this. But let's go down. But I'm exaggerating right there. Let's go take a look. Screen share. Here we go. I'm gonna start doing some. I'm gonna start doing some futures broadcasts too. The only thing is, yeah, we're not open yet, everybody. The only thing is, I am most certainly not gonna sit there and show you support and resistance in Fibonacci. What you're learning, and you may or may not know this, what I'm Miyagiing you with when we go through all of these stocks that I show you, this is exactly how the futures market moves. This is the exact way it moves. This is how it moves. In fact, you can use the markets against the futures markets and vice versa. So it's going to be interesting teaching that. But if you can't do this, if you can't forecast the stock market, if you don't understand the rules associated with trading in the stock market, which that in the surfing analogy, this is 5-foot waves. You still better know what you're doing, but it's probably not life or death. You have a lot of time in the stock market to make mistakes and fix them. In the futures market, you have seconds. So if you can't do this, I am teaching you, believe it or not, you're actually learning about the futures market every day you're tuning in. But if you can't do this, if you can't do this instinctually, and this is where the one-on-one coaching comes in, then you're not ready for futures. You're just going to go over there and get beat up. While the market stays in trend, you'll make money and think you know what you're doing. As soon as that trend reverses, you're done. You'll give it all back and then some. Okay, look at this. That's NextEra Energy. Ooh, baby. Look at that. What's that? That's one of those three firms right there. At the lowest price after the market has completely declined. So you've gone from 95 to 45. So effectively a 50% drop in price. A 50% drop in price leads to extremely high trading activity equals buying. Now, I'm going to take a picture of this. This is a good lesson to learn. We are here to learn, everybody. I always give price targets and target dates as proof of concept. I want that to be very clear. Don't swim out a 25-foot surf just because you're following me, unless you have a death wish. So, let's move in on this. This should have been as obvious as the day is long. I mean, it's matching 2020's activity. That should have been as obvious as the day is long. If it was not obvious to you, I'm not sure that you should be trading or investing. And I mean that. I absolutely mean that. Okay, here we are. So there's your volume, price run up. Let's take a look. Let's zoom in a little more. We're on a weekly. Let's go to a daily. There's a lot of people out there that think or that price over time, price always goes up. Do not come into this world with that mentality. Do you know what guys like Warren Buffett say about people that say that they use asset allocation? Asset allocation is for those who don't know what they're doing. Price drop, you're looking to generate fear. It worked. You got a ton of volume here. Then you had a price rise. What'd you do? You gapped it down again. I mean, this is a gap fills. Gap fills. They are hunting for supply at the bottom of a range. Now, if these high points in the range, like right there and like right there, if you were seeing excessive volume at those levels, that is a problem. But it looks as though next day trying to build up the momentum to break previous high price right there. Keep zooming in. Where's this? Where's that lie? Starting to, and here is selling, and this is on a more near term, right? Run. That's not. Keep it moving. Filled. Here's a gap. Filled. Zoom in a little more. Yeah, this mainly 63 cents from where it is. It's less than 1%, so not worth the play before it rallies. As a positive outlook. There's no, let me go back and see if there's a price target you can pull. Let's go back to a weekly. Yeah, it's going to break through that high. I mean, you're coming back to your 92 area, I would say, without a doubt. Right now, I don't think it has the energy. You may get a pullback. It looks like you will, in fact, get a pullback before it'll try to breach that price, unless institutions gap through that high, which that's possible too. They'll gap through high prices sometimes to simply build up so it creates false energy. That will create market sentiment, emotions, right? So we talk about this all the time. The market has structure, and there are mechanics within that structure. However, that is not actually how the market moves. The market actually moves based on price movements used to stimulate retail reaction. So if I'm an institution, I want to buy more, and I want to scare everyone out. So we're sitting near a high price. I want to buy more. I want to drop price very quickly, create fear very quickly. You'll shake out the weakest hands very fast. Dump it 5% in a couple of days. Weak hands they'll fall. Do that, especially in an up market. Do that in an up market. They'll be selling that stock so fast you won't know what to do. Then they get to swoop up, right? Now, if you're at a high price, but you don't have the actual momentum to carry through that price, you can gap through it, which will create that FOMO, fear of missing out. They'll say, oh my gosh, we've now breached, for example, on NextEra Energy, we breached $80. We're sitting at 83, 84, and it's heading to the highs, and I'm not in on it. So you'll get a lot of FOMO there. So that could be another play. I mean, it's that's another way it could get there. Right now, it definitely needs more energy before it breaches. How that energy comes to pass, well, we'll see. But I would say that's where you're headed. Weekly, let's see. $200, $266. Right. I love hearing how August 5th was like a mistake. I love that. Well, this happened or that happened, blah, 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 blah. Now, we pulled off highs. We cranked off highs. So we had fallen 10% in the NASDAQ. And then once we're down 10%, they gap down the index 5.5%. If you could not identify that that was a move geared towards generating fear so they could buy it all, you got to do one-on-one coaching sessions with me or join the mentorship. But the one-on-ones, you'll never get beaten by something like that again. You'd have been in there buying everything. So on crowd, here you sit. I mean, this is ultimately where you're headed. We are on a daily chart right now. So that's where we're headed, which is like 333. Let's see how quickly we think we can get there. But that is where you're going. So remember, folks, when you gap down like this on high volume and you have price follow through, it takes time to get back there. It takes a lot of time to get back. If it would have gapped down like this, and even if it would have had high volume, but it automatically rebounded in price a bit, like there wasn't that like this level of follow through from 320 down to 200. I mean, this is a massive levels of follow through in price. It takes time to get back there. So let's zoom in and see how long we think it'll be before crowd returns to 333, because that is where it's headed. I don't care what they said about a cyber attack. That's news. News is created to generate FOMO or fear. Crowd's headed back to 333. What's this low here? 336, whatever it is. Yeah, just call it 333 so you're playing it safe. Don't be greedy. Let's see how long it looks like it's going to take. So you went from 200 to 266, and you have another $70 to go. What's volume like? We want to look at volume on a longer scale than this. Let's take a look real quick at volume. Right now, we're still okay. So it certainly has momentum at the moment, even though when I zoom into this 1 hour chart, it doesn't appear so. It does. It's still. All right, nothing here on the 30-minute. Let's zoom into the 15-minute. What we're looking for are gaps, big points of volume, like large levels of trading activity at highs, like this right here, which created the second back down, because the effort is being made to build up momentum to get it back to that 333. Take a little bit of time. They're going to have to raise price and then dump price so that they can buy up more supply. This morning, as you can see, previous purchasing, you are looking at it on a 4 hour. I think you can see it on a 4, and I think you can see it on a 1. You're probably right here. The reality is you're moving up this $70. Let's put this back up. You're coming back here. Let's drop that back down 28. 8/28, 2024. We are looking at crowd. You're looking at what I say 333, just to be conservative. It should hit that 339 or 336 or whatever it is, but I never get greedy. I am always conservative. With a price target, you're on a 4 hour. It's gonna take a little bit. So I'm actually gonna give this last $70. What did it take from here to here? This is that's the fifth, right? Go back. That's the fifth. And we today are at the 28th. So we're like 3 weeks out. We rallied 60, we get 70. It'll be a longer push to come through that. So call it a month. So you're looking towards year end here. Yeah, you're looking towards year end. So I'm just going to put target date 12/31/2024. Now, a lot of guys will tell you, you can't forecast out like that. I'm in options and futures, and you can't do that. Oh, yes, you can. And if you can't do this and you're playing in those markets, that's a big problem. That is a big problem because this stuff helps you to identify where those markets are headed before they're headed there. Because as you break down stocks and you're looking out, towards year end. And so let's just say, hold on, I'm going to stop sharing for a second and talk. Let's just say that we're looking out and we're going through all these stocks in the NASDAQ. And every single one of these stocks is set up for a price rise. You're looking at an hour-long chart. You're looking back and you're saying they're all set up for price increases. All of them, right? You look at the NASDAQ, maybe trading activity is not as heavy. It looks weak. The Dow's pulling down, whatever's going on, right? But those stocks, those positions are telling you where that index is headed by year end. Now, if the index is headed north by year end because you've gone through and you've seen 50 stocks all identifying the exact same scenarios, where are the futures market headed? So while someone can be screaming downtrend or the Ukrainian war started or look, we have a cyber attack, look what happened to crowd, and you're getting scared, so you're selling into those markets. If you're intelligent, well, we're headed here. So all the news, any news that comes out that's contrary to that target based on 50 of the largest positions in that index, it's a buying opportunity. And you know that because you know where you're headed. This is one way to identify trend changes before they actually happen, because the reverse can also be true. You're going through and everything is pointing down. Everything's looking down. You're poised for a down move. Now, if it's far out, you're on a 1 hour chart, a 4 hour chart, or a daily chart, and you're in the middle of a bull market, I'm not telling you that every time bad news comes out, that's the real thing. What I would tell you is look for pure elation, because that is where the selling is going to happen. That is where the trend change is going to happen. That is where trading activity is going to hit high levels at high prices. You can use this stuff, and you should be. And if they're directly correlated, you can use this market to look at those markets. The same with oil, gold, all commodities, all currencies. This stuff all works together, and it all signals each other. But if you don't know how to look for institutional footprints and then how to use those footprints, you're never going to be able to transcend out of the S&P 500 or the NASDAQ or the Dow or whatever these people say they specialize. I specialize in oil. I have news for you. You should be able to specialize in everything. No matter what anyone tells you, I am telling you. You should be able to specialize in everything. Now, is there a such thing as like reading the tape and being in tune with the tape? There is. There certainly is, right? So, but you should be able to take your knowledge and move into any market you want. Maybe you have to sit there for 2 days and just get the feel of the flow. Then that's all it would take you. But then you're trading whatever the heck you want. That's what I teach people. Okay, let's get back to it. I wanted to break away because a lot of times people don't understand, like, the stock market, while the futures market is leading the stock market, it's also not. All right. The futures market is the mechanics of the futures market are part of the foundational structure, if you will, of the stock market. The guys that are down there doing huge future stuff are market makers. So they're part of the foundation. So these guys have to make money every single day by literally getting their risk as close to zero as possible. So when you're watching a futures market, if you think it's going to signal to you what's going to happen in December, you're dead wrong. Even options, to a degree, maybe, but you have an August 5th, they're blown out. But you know what isn't? Stocks, because they move slower. They're the Titanic. All 401ks, pension funds, IRAs are invested in this stuff. Trying to move the stock market is like moving the Titanic. Whoa. Moving the futures market is like, wow, 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 you're in a speedboat. But the stock market's great for navigation. I hope you know how to use that if you're working in the futures market or the options market. I hope you do. Let's get back to it. Let's take a look at some more stuff. What are we going to look at here? We're going to go to SMCI and AI. Gosh, I remember when I covered this a few months ago and I said, this thing is a dog. You can't go parabolic like this, folks. And if you do, you're going to pay. It's just a semiconductor. This is my point about, wait, let me make this point. This is my point about market sentiment, structure, and mechanics. There's structure here and there's mechanics here, but the fact of the matter is this is market sentiment. This is FOMO. This is institutional money generating FOMO by driving price. And how do you identify it? Right there. If you think that that wasn't as obvious as the sun rising in the morning, and it is as obvious as the sun rising in the morning, and then you sit at these high prices for 6 months, come on. It's going to come back from whence it came right here. This breakout at least, which is 353. You're almost $100 away from there now. And that's where you're going. At least. It could come all the way back into this base. And the fact of the matter is, I don't know anything about this company, but odds are it comes back down to $100. But if it's legit and it really is involved, it can very easily come back to 300, somewhere between 300 and 350. That's long term. I'm looking at a weekly chart. Let's zoom in. But if you bought this and think you got, oh, I got skunked, I got unlucky. No, you didn't. This is a lack of knowledge if you're buying into this thing at those prices. I covered this just a few months ago, basically telling you the same thing before the price drop even happened. To be fair, I haven't been watching this that closely. I saw it in this range, I think, and I think I use this as an example of a volume at high prices within a range being selling and that this was going to dump. I should go back. I'll go back and look it up. Is there anything here? Well, this gap's interesting. Remember, as prices fall, see these gaps here? They're filling though. Zoom in. Look. Yeah, these are small gaps though. This is an individual position. Remember, individual positions are not as reliable when it comes to gaps being price targets as you have to remember that. I'm gonna have to zoom in if we're ever gonna see. Look at that. You can't even barely differentiate the price from the volume. Look at that. It's down 20% today. That's funny. I didn't do this. Talk about gaps filling, right? That's why this gap filled, because they're driving price down. I didn't even realize price was down $100 today. I swear to you, I didn't. I could just tell that this thing was due to dump, but you have to see something. This is a huge gap. Huge, huge, huge. But it's on huge volume. If there's follow, okay. Hello. So if there's follow through, gosh, that you still can't see it, huh? All right. There we go. Now, if there is As you can see, this is your volume bar on a 4-hour chart. Now, the market hasn't been open for 4 hours, guys. This is going to be a monster volume bar here today. If there's monster volume here, which there will be, it should probably exceed everything on this chart. It should probably be somewhere around here by the time 4 hours are up, right? We're only 20 minutes into the trading day, and it's already amongst the higher bars on this chart. So it's probably going to finish somewhere up in here. But if there is price follow through on high volume, this 500 mark is going to take time to fill. Okay. But it's not price follow through on screaming high. Gap will fill quickly. I honestly cannot make a price determination right now. It will zoom in a bit and give you an idea of what, but I do not base my opinions on what I think. I base my opinions on what I know and the rules that I follow. And the rules that I follow mean I can't give you a price target on this yet because I have not seen how the volume will follow through on this particular day. Yeah, there's nothing to be said here. What's it say so far? I have to be able to differentiate this price and this volume, and I literally can't zoom in enough to do that. Hold on, let me see what I could do here. Dag nabbit. What the heck did I hit? Bump something. Doesn't matter. I'll just fix it, but let's really zoom in. Let's see. Sorry for my head down like this. Let's see. That's screaming volume down, down, down. That caught some. Down. Looks like it's trying to catch it again. Let's go to 1 minute. Okay, here we go. Let's see. So we started at what? What's the high there? We started at 487. So we've fallen $50. We've fallen 10%. It's roaring down. Is it being caught? We'll check back on this before I end this broadcast. Right now, there's not enough because what you're either going to be looking at here, what the goal here would be, it would be to generate a massive amount of fear. Like, for example, if you close somewhere up towards 460, okay, if this were to close somewhere up towards 460, this gap will fill rapidly. If it closes somewhere down near where it is right now, you're probably looking at it's going to be a while. All right, we'll check back in on this one. We'll check back in. That's so funny that I was talking about this SMCI and then this happened. That's amazing. Makes me laugh. This again, it's just one of those things where even though I know what's going to happen, and I swear to you, I didn't look right. I didn't see that. Even though I know what's going to happen, you still go, wow. Like it's funny watching it happen in real time. So, for example, we were just talking about what SMCI looked like and how it went parabolic, which means straight up, and how it had to come back to its previous high, something like that, or maybe even like that. What do you think is going to happen with NVIDIA, right? What do you think is going to happen there? Is it at its peak price yet? Well, here's Tesla, and let me show you what it would have looked like before. That's what it would have looked like. Where did it go? Where did it come back to? Fell 75%, everybody. This is Tesla. Do you think Tesla or NVIDIA makes more stuff? All right. So there you have it. As you can see, Tesla sat up here for 4 or 5 months before it fell 75%. So there's your NVIDIA. I don't need to look at NVIDIA. We're going to come back to SMCI. What was the other stock I said? What did I say we were going to look at next? Oh, AI. Let's go to AI. Yeah, obviously. So this isn't even institutional hands. They just pumped it. So I'm not looking at this. I don't want to lead anybody down the wrong street. So we have Play SQM. Let's see, Play and SQM. Let's go back to Play. We had a great forecast on this. Play, let's see where we're at now. We're going to zoom in a little bit. It's to the base of the range. Trading activity is telling us nothing at the moment. It did exactly what I said, which was hit 52 and then just absolutely tank. That was just a couple of months ago. Let's see if anything's changed. How far down should it go? See how there's a gap here on screaming high trading activity with a ton of price follow through? Like I said, it'll take time to fill that gap. Now, with this particular position, let's see, the gaps tend to fill. Well, you have a gap here. You have a gap. Yeah, they do actually. So you're probably like right now, this is a decent price target for it, 35. Let's zoom in a little bit. Here it is on a 30-minute chart. You have a gap down, gap filled. You have a gap down, gap filled. Yeah, you're looking at 35 here. Duck just landed in my pool. That's hilarious. 35. Boop, boop. Let's go right there. So you got 35. You're probably, we're on a 30-minute chart, guys. So you're looking at, I mean, you're probably looking at a month there, I would say. So it's 8, 28, 24. If you don't know how to choose target dates, that is something I do in my mentorship program. And that is also something that we focus on heavily in the one-on-one coaching. All right, there we go. And target date. Yeah, we're going to go to 10-1. I'm going to zoom in on this too. There might be a shorter term date on here that could be fun as well. What I like is I like to pick up positions that I can go long and short in simultaneously. And you can say, hell, it looks like it'll go here first, looks like it'll go there first. Even if you're wrong, you're not wrong, and that's why I like it. It's the greatest way to reduce risk is to find a position that you can see two price targets on, both in different directions, and then you can build into each position. Yeah, I mean, up your first stop's probably somewhere in here at 32.50, right? So you should achieve. Whoops. You should achieve 32.50 inside of what, 3 days or so? Yeah. 8/28, 2024. Now this happens to be in the same direction, right? I don't control that. But this is a good short-term play. %, couple days. Why not? I think I have to go to the third. I think the second is Labor Day. I think. All right, there we go. Remove 5. Let me see where we're at on time here. That's 40 minutes. Let's do one more. We'll do one more, and then I'll do more tomorrow. SQM. Yes, Kim. All truth be told, I could sit here and do this all day, but I don't want to bore people. Looking over. Uh, yeah, we had a great forecast on this before. It doesn't look like anything has changed. Hit target, hit price. Like, look, if you wonder or question the accuracy of what I do, head over to my Twitter. That'll solve that real fast. You can feel free to go through my lives as well. But I put a lot of charts up that are very defined. I define every forecast I make for a reason. I define it as proof of concept. I am not one of those people that regurgitates news that's been said 500 times. I am not one of those people that is vague about what he does. I don't do that. People that do that because they don't know what they're doing. They make a lot of excuses for not knowing what they're doing, too. The truth is, they can't afford to put prices and target dates and target prices. They absolutely can't afford to do that. Why? Because they're rarely correct. They have no idea. You can listen. Trust me when I tell you, you can work in finance for 25 years. Because there's so many kind of like little niche things that people do, and they understand their little niche things, but a lot of times their little niche does not translate into making money in the real market. It translates into making money for their company. Their company does some job inside the market. They do something, right? And then you know how to help that company make money. But when it comes to understanding market direction or what's going to happen or anything like that, these guys are as clueless as a high school kid. They have no idea. They just knew how to do their job. What I do is learned from, dude. Look, you can say it any way you'd like to say it. I got it out the mud. I created it. I had no information. I didn't have anything. I had a chart. I became a financial advisor. I realized it was a farce, that they didn't have any idea how investments worked, how the market worked. To me, that is not satisfactory. Asset allocation seems like something to me a third grader should be doing. I don't understand why someone makes a lot of money and charges you a lot of money for asset allocation. That should be worth a nickel. Not even that, actually. It hinders you. You'd be better off opening a Schwab account and buying SPY and going to bed. Why would you pay someone all that money to do nothing for you? Oh, they created a budget for me. No, they didn't. You know they didn't. They don't create financial plans for you. You know that. Don't lie to yourself. You're getting the most basic of estate planning at most of these places. There's one or two guys that have an idea of what they're doing. They're good at it. Most of the time, it's an insurance agent, and they just it's because you fund estate plans with insurance products, so it makes a heck of a lot of sense. Anyway, I'm not trying to knock anybody. That's just how I got started. I was in that industry for 15 years. I was a black sheep. I never did asset allocation. I didn't believe in it. The day I walked away, which was like roughly around 15 years after the time I started in that business as a financial advisor, I still have my very first client. And every single client was emailing me and texting me and asking me not to leave, but I was done. It got so regulated that you couldn't even make your clients money anymore without having someone breathing down your neck and busting your hump every single day. So I left. In any case, that's a fact. You have an advisor and you're watching this and you think that like I don't know what you think you're paying for, but if you like the NASDAQ, go buy QQQ. If you like the SPI, go buy SPY. Or if you like the S&P 500, go buy SPY. Dollar cost average into that thing every single month, meaning put money into it every single month. You'll do far better than you ever will with that advisor anyway. And if you really want to learn how to make money and how to be active and not spend your life doing it, contact me. All right, one final time. Mentorship starts today. I'm not going to drill that home anymore. You have until just after market close to get yourself signed up. Email dmiller@prometheaninvesting.com. Reach out, name, phone number, email, and one-on-one coaching. You can email me as well, dmiller@prometheaninvesting.com, or you can always head over to prometheaninvesting.com and fill out the contact form, and I will get back with you, and we can get you started. In any case, it's a great pleasure doing this with you. I hope you enjoy it as much as I enjoy doing this, and I really do enjoy doing this. If you're not following me on Twitter, you should be, just because there's so much information that I put up there. It's Derek Me 752-63605. Do that. Get over there. Follow me on Twitter. I put up on LinkedIn, but not nearly as much. But I do put quite a bit up there. It's just honest dash trader. You'll see that it's me. On both of those, you'll see that it's me. On Twitter, there's a blue check mark, and I actually pay for that check mark so people know that it's me and that I show my ID. LinkedIn, you can't verify, but you'll see. It's me. Okay, that is it for me today. Hey, remember something, everybody. If you're not good up here, you're not good anywhere. Get outside, go for a walk, see the sunshine, do some martial arts, right? Anything. Okay. Sometimes you have to fake it till you make it. Throw a smile on, right? Smile, baby. Smile like an idiot for an hour. You'll feel better. Turn a song on. Do something. Do something to break that brain out, man. These brains can be a weapon formed against us, I tell you. And you can't let that happen to you. You know why? Because you're batting 1,000. You're a winner. How do I know that? You're still here. You've never lost. You're in the fight. And that's what life is. That's what life is. So don't let this beat you. This is full of shit most of the time. You're right. You're batting 1,000. You're winning. You've never lost. Is that inspirational? And listen, if you need someone to talk to, and I mean this very seriously, and you have no one to talk to, you call me. You fill out that contact form, and I don't care what you write on there. I will get back with you. Put something in the notes. I will reach out to you. You don't have to sit there alone. A lot of you guys out there, specifically men, you think you do. You don't. Look, we care, man. The world tells us that we're this and we're that, and we're not supposed to this, we're not supposed to that. Yeah, right. You're a human being, my friend. You don't have to stuff that down so you have a heart attack at 52 and die like a real man. That was Bill Burr. I stole it. Look, everyone knows I stole that. All right. Hey, listen, thank you so much, everybody. Remember, every day above ground's a good day.